This is, as you say, exactly what investors and economists had expected following the Fed 50 basis points. The vote split, I said, was going to be interesting. Again, it is. It's a three-way split. Mann wanted 75, Dhingra and Tenreiro wanted softer. And there had actually been warnings of a four-way split, so a bit less than that. You might call it chaos. Others would say it's a good thing that there isn't groupthink on Threadneedle Street. In terms of the market curve, remember at the last meeting, they were very blunt at pushing back against market expectations for the future path for rates. This time they've dropped that guidance, so very interesting. I wonder whether that'll be interpreted as an endorsement of the curve. And then in terms of the fiscal statement, remember that this is the first Bank of England decision since Jeremy Hunt's autumn statement, and here they've said that the fiscal measures cut GDP by 0.5% in 3 years' time, so very interesting. I'll be interested to see what's in that exchange of letters between the governor and the new chancellor. Should be a very different tone from Jeremy Hunt. Kwasi Kwarteng, remember, was very, very focused on growth.
You know, Lizzy, I look at where we are, and it's just shockingly eclectic, the Bank of England versus what we see at the central bank. How unusual is this collared dissent this morning, where some say a higher interest rate and others say no, a lower interest rate?
But look at the economic data that's coming out of the UK, Tom. It's as divided as the committee. Just this week we've had GDP, jobs, inflation. Look at the jobs data alone. You've got unemployment rising, but wage growth rising too. It's a mixed bag, really. So, of course, you're going to have hawks on the committee like Mann, who say that, you need to get in control of inflation expectations with a big hike now. You're going to have doves on the committee like Tenreiro and Dhingra, who say we're hiking into a recession. We need to be careful here.